We've got a lot of stuff coming. We're really excited for what the Best Ever Conference is bringing to you today. We've got another day and a half left. I feel like maybe I lived 100 lifetimes just yesterday. We had the workshops on Sunday as well. And the way that you guys were partying last night, I kind of thought today might be a Saturday because last night felt like a Friday night. But I'm so excited to bring this next person up here for you today. Can you please welcome to the stage Russell Gray?
Okay, here we are.
Thanks, Russell. Thank you.
Thank you. How's everybody doing this morning? Yeah? Really? That's it? Come on. Let's get excited. How many want to talk about the new sheriff in town? We got a new sheriff in town, as you know. So some of you know me, some of you don't, so I'll just give a brief introduction. I am starting a new podcast, a new show called Main Street Capitalist. I'm an evangelist for Main Street Capitalism. I am a promoter and have been for a dozen years of Main Street, investing in Main Street. So I promote everything that you guys do and stand for. And so that has become a real passion for me. I don't care for Wall Street. I don't care for monopolies. And I want to set Main Street free. And you do that by Main Street investing in Main Street entrepreneurism. So I created last year a foundation, nonprofit organization dedicated to sharing and involving young people in 8th grade, 9th grade, middle school and high school in teaching them capitalism. And so I've been working with large organizations that push out to homeschoolers and whatnot. Because think about this for a minute. There are 14-year-olds right now, 14 years old, 9th graders right now, 8th graders, 9th graders, that are going to be voting for your next president. Think about that. What do they know about being productive? What do they know about what it takes? See, if they think everything should be free, if they think you guys aren't paying your fair share and they get a vote, we have to really engage our young people. So this is a big crusade of mine. I'm partner in a mastermind called Collective Inner Circle with a guy you probably know, Ken McElroy, George Gammon, Jason Hartman, Robert Helms. I've been doing that this last year. We did that merger, so doing that. I was 20 years co-host of the Real Estate Guys radio show. Maybe some of you know me from there. I left that about a year ago to do all these other things I'm talking about. If you've ever listened to me talk, you know I love to study economics, and I love to study economic history. As they say, those who fail to remember history are doomed to repeat it. Many of the things that we're seeing in our economy today, many of the problems that are manifesting have their roots in historical decisions. And if you don't look back in the past, you really can't see where you are and extrapolate to where you think you're going. So I spend a lot of time in my content talking about those things. As I mentioned, I'm an evangelist for Main Street, investing in Main Street, and I train capital raisers, specifically in what I call how to win funds and influence people. A lot of people are pretty good at doing lead gen, some aren't. If you're interested in starting a financial podcast and using it to pull people through into your capital raising, let me know, because I'm starting a coaching program to do that. I've been doing that for a very, very long time. But the real thing is when you sit down face to face with somebody and you're going to have a conversation about their hopes, dreams, goals, and desires, and you're going to get into their heart and help them understand how your offering can help them achieve their goals, not make a ROI, but change their life. Then all of a sudden, as Jeremy was talking about yesterday, you have people where you've touched the heart. And when the heart places the order, the brain is looking for a reason to say yes instead of a reason to say no. So if you're not already investing in developing your sales skills, do it. ClickFunnels, you don't raise money on ClickFunnels. You got to be a really, really big brand to send out an email and have people wire you money. You'll get there. But in the beginning, it's going to be a lot of conversations. So keep that in mind. So we got a new sheriff in town. It's not me. 2015, I had a chance to interview this guy. Before he was the firebrand and pariah that he is for some people today, he was at a land conference in Iowa. And I got a chance to get into the press room and ask him a question. Right after that, I got this picture taken, and then he shortly thereafter announced his candidacy, and then I got a chance to interview him one more time that June in Las Vegas at Freedom Fest. And but what was really more telling in that is that I got a chance to spend a lot of time with his longtime attorney, George Ross. If you remember the original Apprentice, George was the old man. And he's still kicking, and he's really old now. Great guy. But Robert Helms and I had a chance to speak on stage with him in New York and then drive him from Manhattan to his home in Long Island. And we were in the car with him for about 2 hours, and he was telling all kinds of stories about the projects that they had done together. He was Trump's attorney for 45 years. And we were just in this car. And then we went into his home. We had coffee and cookies. He was very, very gracious. And I'm asking him all kinds of questions. Is this guy crazy, man? Is he a lunatic? Does he shoot from the hip? Does he have an out-of-control temper? And so I feel like Donald Trump is the only guy who's ever sat in the White House that I've ever met or talked to. And other people that were in his circle, I've had a chance to get to know. So even though, he wouldn't know my name, I do feel like I understand him a little bit better and than maybe the average person. And then, of course, I've been a student of Donald Trump for a long time because he was the ultimate real estate guy and a master brander. So some of you I know hate him. Some of you, I think, love him. And maybe some of you are in between. But regardless of how you feel about him, he is driving the ship right now. And he is really aggressively moving. And so I want to talk this morning about what I think is going on inside his head, how he's approaching the problems that he's trying to correct, what he's actually trying to do. I'm going to try to be as agnostic as I can. I'm not here to cheerlead for him. I'm not here to attack him. It doesn't matter. Nobody cares how I feel about it. It just matters what's really happening and how do we read and react. We all run our investing and our businesses inside of an ecosystem, an economy. And there's things going on under the surface. There's things going on in the weather. There's things happening on the horizon that are coming. There's a reason mariners would get up on the perch and look out the bird's nest as far out on the horizon as they could see because they wanted to know, am I going to run into rocks? Is there a storm coming? Right? As when you're stewarding other people's money and you're trying to take it on a journey towards success, it's your responsibility to be the visionary. You've got to see down the road and see what's coming. And, some of you have been through some very difficult times in the last couple of years, and it's actually great. And the reason it is there's an old saying that says, smooth seas do not make a skilled mariner. You're actually going to become a better manager, even if you've taken some lumps. So if you've had some failings, it doesn't make you a failure. Get the lessons, carry them forward, and be better the next time. So we'll talk about some of the things that are happening. Mallory Bateman yesterday used the word policy 3 or 4 or 5 times. And I want to suggest to you that policy matters. What a lot of people do when they look at the economy is they look at the numbers, they look at the data. But the data is a reflection of policy. So the further up the food chain you can go, the sooner you can begin to predict or hypothesize about what might be coming. Because everything that happens up there gets on us down here. I call it macro to Main Street. So if you don't understand the macro, by the time it hits Main Street, you are maybe out of position. If you've listened to me any time in the last several years, I've told the story about how I got wiped out in 2008. Pretty smart guy, working hard. I thought I was paying attention. I didn't think the shenanigans on Wall Street affected me. And then when I heard about the subprime crisis, and I'm like, okay, well, that's just a small percentage of what's going on in the mortgage business. It's not going to get on Main Street. It's not going to hurt me. What I didn't understand was the leverage. Jay Parsons on the first day, if you heard him speak, said, hey, $80 billion of commercial real estate is not really that big of a deal against the trillions of dollars that are out there. But that's a data analyst, and I'm not putting Jay down, very, very smart guy. But what I learned after 2008 is that Wall Street applies massive leverage to their positions. And so if you have $80 billion leveraged at 50 to 1, what is that, $4.5 trillion? Some huge amount. It makes a difference. That's why 2008 happened. It was the derivatives and the leverage that you can't see unless you really understand the financial system. So it is a concern, and we need to be paying attention to it. And so I could go on that, but here's the way I teach it. If you're old enough to remember this game Mousetrap, which I played when I was a kid, you put the little silver ball and it drops down into the bathtub and the bathtub falls down and it triggers a whole sequence of events, cause and effect, cause and effect, cause and effect, until ultimately the trap comes down and captures the rat. Well, so on Main Street, we're the rats. And what happens is the guys up at the upper echelons making policy put things in motion that come down and get to us. And so the further up that we can see, the quicker we can react. Now, the problem is with reaction is you got to react fast when things are changing fast. We have the most aggressive administration I think we've ever had, certainly in my lifetime, maybe ever. And things are changing more, probably as dramatically as back in the New Deal when they were coming through the Great Depression. And FDR was changing everything, the whole remake. And so again, if you don't study history, you don't maybe understand that. But the thing is, your ability to read and react is paramount right now because things are changing very quickly. And I want to talk about what some of those changes are. Looking at Trump 1.0, my takeaways are this. Number one, he thinks like a builder. Go figure, right? Builder. He thinks like a builder. And what builders do is they break the thing up into things. There's the land, there's land development, there's the getting the capital stack, there's the foundations, and then there's all the components of the structure. So I think what he's doing is he's looking at this economy as a giant building project or reconstruction project, and he's parsed it into different categories. And he's addressing each one of those categories. And so sometimes it thinks like the guy's all over the place, but he's not. He's just managing a lot of different things that are all part of one singular picture. My goal this morning is to help you understand what I think that picture is and give you some context so that when you hear the headlines and you see what's going on, you know where to file that. If you're in accounting, you know that you got to have a chart of accounts. Otherwise, you drive your bookkeeper crazy. You just start showing up with receipts, and they don't know how to code those things. Right now, we have data coming at us so fast, policy changes coming at us so fast. We don't know what to do with it. So what do? We ignore it. And that's very dangerous when you're stewarding other people's capital. So he's, I think, attacking the components of cost. He's going to value engineer the economy so that he cuts costs in areas that he doesn't want to spend that don't make that big of a difference, so he can put more money into the areas of the economy that he feels are important. And so if you just understand that at its face, you're going to say, well, okay, then I want to know what he's going to cut, because if I'm there, I might be on the losing end, and I want to know where he's going to move money or create incentives to move money, because I want to be on the winning end of it. So it's just trying to figure out where the puck is headed, so to speak. And so I think he's going to be reorganizing the nation's priorities and investing for a better ROI. That's the way I think he works. Now, the thing is, right now, Trump 2.0 is a bull in a china shop. What he's got is what he feels is a mandate. He carried all 7 of the swing states. He carried the popular vote. He got the House. He got the Senate. And he is moving aggressively. We all know historically, the incumbent loses the House at the halfway point. So if he's looking at that, if I'm him, I'm like, okay, whatever I want to get done, I got a window, not 4 years, but 2. And I got to move very, very quickly. Now, the other thing, I think what he's going for is a supermajority. I think just like he kind of second president to be elected in non-consecutive terms, be reelected in non-consecutive terms, I think he thinks he can beat the odds and he can move to supermajority. I think a lot of the exposures that we're hearing, a lot of the investigations that are going on are designed to restructure the Congress to give him a supermajority. I'll tell you what I think he's going at the end. I could be wrong, but I think so, and I think it's something we all need to pay attention to, because it's so far outside the realm of the way we think. If it actually happens and you're not watching for it, it might catch you flat-footed. So the fire-breathing dragon this guy has to deal with is inflation. Inflation is the thing that swept him into office. It was the thing that really undermined Biden's legacy and presidency. It's the thing that has burdened the economy and a lot of us, because the reaction to inflation in the marketplace is higher interest rates. How many of you have been hurt by higher interest rates? Right? A lot of the marketplace, values everywhere, asset values suffer when interest rates rise. That's true in real estate, but it's also true in every aspect of the economy, and especially in the financial system. Just like an apartment building, if the rents stay the same and the price goes down, then that means the cap rate goes up. In the bond market, when interest rates go up, it means the value of the bonds go down. It's the same principle. If you don't understand that, take out a calculator, start to play with it until you get your mind around it. And then understand that the assets, the anchor, the foundation, the stability, the collateral that backs up the entire financial system are bonds. And so any organization that has a bunch of bonds on its balance sheet at a certain rate, when rates rise, those bonds fall in value. So as soon as these rate hikes started happening, Silicon Valley Bank failed. Insurance companies are in trouble right now. That's why our insurance premiums are going up so high. They can't sell their assets and realize the loss. They have to generate operating capital from premiums. And we're all feeling that. So again, macro to Main Street. Policy matters. And inflation is the thing that is the most destabilizing thing in an economy. And we've been living with inflation as a given since we went off the gold standard in 1971. Most of us in this room, some of us weren't even born. Most of us in this room were not adults and did not actually ever operate in a world before we were off the gold standard worldwide. This is a 54-year experiment that's at the end of its shelf life. There is going to be a reset. The question is, what's it going to be? Are we going to go back to a gold standard? Are we going to go a Bitcoin standard? Are we going to create a central bank digital currency? What are we going to do? I don't know. I'm watching. I think there's some signs. We'll see. But if you're not ready for that, then I think that you could get blindsided, maybe even worse than I did in 2008. Higher taxes as a result of inflation. Even if they don't raise taxes, when the property values go up, the tax assessment goes up. When wages go up, tax goes up. When profit goes up, tax go up in terms of absolute dollars. Just paying more. The rate may not change, but the amount of dollars do. So some people might think that's good, but any taxes that come out of the private sector diminish productivity. Higher costs, because interest rates are a component of cost. Inflation, all the commodities that go into any goods and services are all components of cost. And so in order to bring product to market and create productivity, which pushes down inflation, you're going to have to be able to produce, and you have to cover all those costs. If you can't get production up because of cost, you have to attack the components of cost. That's what I think he's doing. Inflation negates productivity gains. If you say, well, okay, I've invested capital, I've created new processes, I brought all these efficiencies in to bring my costs down, but then they inflate and bring your costs right back up again, all those productivity gains are stolen, even though they don't show up in the price. You know, the prices aren't up. No, the prices aren't up, but all those productivity gains, all that profit, everything that could have been reinvested in the economy is gone. It's like having an apartment building and not having any contingency to replace the roof or the parking lot. Right? It seems like everything's great right up until the parking lot needs to be repaved or the roof needs to be repaired, and then you're completely out of position. So we have a lot of deferred maintenance, if you will, in this economy because inflation has been stealing the productivity gains that should have been invested in order to make us productive today. So our productivity has dropped. And of course, the fire-breathing dragon for Trump is political disempowerment. If he loses the inflation fight, he's going to get kicked out of office. That's what's going to happen. First, he'll lose the House, and then he'll lose the office. And I don't know whether he thinks he's going to run again or not. You know, one of the advantages we have, he's kind of a lame duck. I'm not going to hit that because I got to pick up the pace here. So he is walking a tightrope, and I want to get into the meat of this real quick. Here are the components of cost that I think he's dealing with. If you've got the price up at the top, here's everything that's built into it. Let me hit them real quick. These are your chart of accounts. When you have news coming at you, you want to look at these different things. Number one, unproductive spending. Unproductive spending is government spending, which drives inflation. Milton Friedman, I think it was Milton Friedman, talked about government spending being the driver of inflation. So obviously, unproductive spending in any business or economy is going to be a waste. Energy. Another area. Economy is energy. Energy goes into everything that we do. It drives costs with everything. Regulatory compliance, right? So, you know, every time you have to send a 1099 to somebody who makes only $600 or file a beneficial owner information or comply with some regulation or pull a permit before you can move forward, that thing slows everything down. It costs money. Taxes. I don't need to talk about taxes. Interest. We understand interest. Price of commodities. For those of you who are in development, remember we had the big lumber thing. We have steel shortages. We have copper, whatever it is. Components of cost. Transportation. To move things from part A to point B, right? That costs money. Not just the fuel, but the time and the distances and whatever fees may be involved. Labor. Labor is a big expense. And velocity. Now, velocity is a hard one to get your mind around, but imagine if you ran a retail store and you had $1 million of inventory. If you make 5% every time you sell that inventory and you only turn it once a year, you make 5%. If you turn it twice a year, you make 10% annualized. If you turn it 4 times a year, 20%. You understand? The economy is the same way. Taxes are the same way. The faster the economy moves, the faster money is circulating. That tends to drive up inflation. It also tends to drive up taxes. And so, but to get an economy moving, it's going to have velocity. So he's got to juggle this. So here's how I think he's going to attack the problem. He's going to cut unproductive spending. Doge has already started doing that. He's rooting out waste everywhere. So I'm going to cut productive spending, he says. Energy, drill, baby, drill. So that's going to create all kinds of investment, tax incentives, jobs in areas where energy production is. Regulatory compliance. The Treasury just announced that they're not going to enforce the beneficial owner interest. He's told his bureaucracy that they're going to, they have to cut regulations. For every regulation they put in, they got to cut 10. Now understand, Congress creates a statute, which is the law, and then hands over the responsibility for implementing the statute to the executive branch, and they create regulations. That's why when we got the Jobs Act in 2012, Congress said that we, as Main Street syndicators, can advertise to accredited investors, but nobody could really do it until the SEC issued the regulations in September 2013. All right, so understand that some people think he's being a dictator because he's aggressively managing the regulations. And they say, oh, he doesn't make law. He doesn't make law, he controls regulations, and his goal is to bring regulation down to free up the ability for the economy to get moving. Taxes, from Trump 1.0, obviously it was a huge tax cut, the biggest one we'd had since Ronald Reagan. I think the reason he's cutting spending so aggressively is so he can go to Congress and say, look, most of the time when a guy asks for tax cuts, everybody wants to know how he's going to pay for them, and you promise to pay for them later. I'm paying for them right now. I'm bringing costs down. Give me my tax cuts. Now, I don't know whether he's going to succeed or not, and his tax code will tell you where he wants to drive that money, and that's how we know where the opportunity is. Opportunity zones, depreciation and capital investment. A lot of things we saw in Trump 1.0, I think he wants to put on steroids in Trump 2.0. Commodities. If we produce more commodities, if he's doing deals to get strategic metals, he's opening up mining and development. So this is all designed to create more supply to bring costs down. Transportation, went after the Panama Canal, paying fees to pass through the Panama Canal. He's like, no fees. Like, let's bring manufacturing back from China and put it here in the United States, much less lower transportation costs. I mean, each one of these moves the needle in several different areas, but these are the areas I see him attacking. Well, if you understand, if you can get those costs down, you create space. What do you do with that space? Well, you're going to push the prices down, and you're going to be able to increase the things you want to spend more money on. He wants to speed the economy up. That would be inflationary if he doesn't compensate for it someplace else. He wants people to earn more money. He wants to create more jobs, middle-class jobs. And so, I understand the whole tariff thing, but I don't know that the tariff thing is as much about revenue generation as it is about coercing people, like any tax policy, to get them to move and do what he wants. If you add up all the announcements of the money, the investments that are coming in, Taiwan Semiconductor just announced $100 billion coming in. Honda's coming back. He's only been in office for like 6 weeks. Again, I'm not cheerleading for him, but I'm saying these are things that are being reported in the news, and you can begin to see what he's doing. And so if you set your proclivities aside, if you say, oh, he's God and he does everything right, that would be a mistake. He's going to make mistakes. And if you say, oh, he's the devil and everything he does is wrong, then you're probably going to not be able to see the good things that he's doing that you could take advantage of. So as much as you may have a political opinion, be agnostic, just like when you look at your financials. When you underwrite a deal, even though you love the property, you love the project, you want it in your portfolio, you can't wait to own it, you run those numbers, you don't change them. The facts are the facts. You go where the numbers take you. You have to go where the news and the announcements and the policies are taking you. So I'm hoping to give you some context for that. Real productivity is deflationary, as I shared. So you've got components of cost we cut, demand we want to increase by speeding up the velocity of the economy. That's going to push prices up. But supply will drive it down. And supply is really interesting. You understand supply and demand. So I'm short on time, so I'm going to kind of jump to the chase here. He's got to stop the presses. He's trying to get control of the Federal Reserve and the printing. You've got to do that by cutting spending. And he's adjusting the 10-year, not by harassing the Fed, because the Fed tried to lower interest rates and rates went up. But every week that he's been in office since he got inaugurated, the 10-year's gone down. He's doing it by not issuing as many bonds into the marketplace. You decrease the supply, and people need them to play in the casinos. They will bid them up. That will drive rates down, and it's working. Watch gold. Gold is a big, big deal right now. They're going to audit Fort Knox. They repatriated 2,000 tons of gold. If we are moving towards a reset and it's going to be gold-backed, gold is going to be very interesting. Some other threats are BRICS and their drive to undermine the dollar. Trump came out and said, if you do that, we're going to slap 100% tariffs on you. So anybody that tells you that the BRICS aren't a threat, Donald Trump thinks they're a threat. Tariffs leading to trade wars, that's a threat. Markets and industries dependent on government spending. If you're involved in a marketplace that's dependent on government spending, just understand you better know where your tenant's employment comes from. That's what's going on in Washington, D.C. or Arlington right now in terms of homes being listed because of all the cuts in the federal government. Opportunities, energy-related markets, manufacturing incentives. Look for sleepy towns that could be manufacturing hubs. Subscribe to business journals, trade magazines. Try to figure out where the leaders of industry are bringing factories. Trade policies could boost strategic industries. We're already seeing that. Tax policies, which we're waiting to see, are going to tell us where capital's going. I'm going to skip that for now. We're in a construction zone. Stay alert, stay connected, what you're doing, preaching to the choir, read great books, study history. If you listen to my show, I'll do that for you. I'll point out things to you that I think have been very helpful to me to form my own understanding. Mastermind with other people. Dig deep. Don't just do cursory listening. Ask great questions. Listen to people who you disagree with. Very, very important. And help your investors understand the resiliency of real assets on Main Street versus paper assets on Wall Street. I mean, right now there's a bloodbath in crypto and some of the tech stocks, right? The safety and security, you don't have to compete on ROI, you have to compete on risk-adjusted ROI. And Main Street is very faithful, very steady Eddie. Boring is sexy. All right, if you want to follow me, just send an email to follow@russellgray.com. I'll let you know everywhere I'm posting content. Really appreciate your time and attention today. Have a fantastic day.